cheap credit and discount offers boosted sales this festive season, both for brick-and-mortar stores as well as for e-commerce players. Was Infibeam able to tap into this festive demand? Is that what's keeping the markets happy with the stock? Let's find out from founder and CEO Vishal Mehta. Good morning, Vishal. Thanks for joining us here at BloombergQuint. Quite evident in my introduction was the very first question, and that is, how have the past few months in terms of sales been for you? And then I have a question more on the structure of your business, but let's get on with the festive demand point of view.
Sure. See, generally in Diwali, which is the festive season, you always see a jump in terms of the overall volumes, much like it happens in offline retail. Online retail, of course, it's still in the infancy. If you look at online as a percentage of overall retail, it's still very small. But, as far as the expansion is concerned, it is, growing at a very rapid pace. So if you look at the festive season, I think it was, of course, in October. And, so as a result, you will see that, Q3 for most companies, both in offline and online retail, potentially becomes very large. You would see some impact even in September month as well. Specifics, of course, we will be disclosing in terms of our quarterly results. Having said that, as far as the consumption story of India is concerned, as well as online, e-commerce is concerned, it is very large. And we believe that that trend is expected to continue on. More and more consumers adopting online formats, as well as, with the proliferation of, devices, as well as internet penetration through aggressive plans with, telcos and many others, that we expect that more and more consumption potentially moves online. And as a result, a lot of offline formats potentially become hybrid formats where they offer both offline as well as online, access for consumers to purchase products. As far as, you mentioned our business model is concerned, you see our business model is more B2B today, which means that we provide infrastructure and software frameworks.
Vishal, if I may interrupt you there, I'm so sorry to do that, but your services business has fared far better than your products business has, and I think I was later on in the conversation going to get to the question of, do you really want to be, many things to many people as opposed to just one focused thing, because it just seems as if your services business is doing much better, whereas it comes to the hyper-competitive e-commerce business, you're not quite up there on the top of the heap.
You're right. So basically, it's very important to understand the business model that we have followed. And you mentioned that services has been growing significantly for us. And that has been a huge cash cow for the business, which allows us to build a very strong balance sheet and P&L. So let me maybe spend a minute or so talking about our business model. And that potentially answers your question about, what happens to the product segment. You see, we have continued providing infrastructure and software as a service to many of the retailers and brands. And today we've got more than 70,000 odd merchants utilizing our framework. We had a subscription model whereby we get paid. And that also includes retailers both in domestic as well as international markets. Recently, we've also signed up Government e-Marketplace, which is a government initiative to build out a marketplace where central government procurement also moves through it, where we were awarded a contract as part of the consortium where we are providing the core e-commerce engine. So you see, that is about 7 lakh odd crores in terms of the central government purchase that potentially moves. And if you go to, a Government e-Marketplace website, you will see real-time stats in terms of how much procurement is happening through those, opportunities. So we have a software and infrastructure vertical where we are an enabler and not necessarily a single destination where people have to come and shop. And that has been a core revenue driver for us. And in the last few months, we've also, through the merger of CC Avenue, moved from just not subscription, but also transactional volume. So we make money out of every transaction. Last quarter in Q1 of this year, we processed more than 4,500 crores of transaction volume. And the company earns a small portion out of every transaction. So if you look at a run rate basis, we process more than 18,000 crores of transactions. So not just the subscription revenue from the merchants, but we also added a transactional piece where we make the revenue out of every transaction. So that accounts for our service revenue. And that has been a core driver, that has been a focus of the company for the past several years. So rather than positioning the company as a single destination or an e-commerce
Vishal, explain to me, why would you not then just focus on what seems to be a fairly lucrative, well-established services business for you, as opposed to continue in a products business that is hyper-competitive, a big cash drain, and in which you don't fare very well on any of the metrics, and which has not been providing you as much growth?
There are two things. One is that we have continually focused on supply chain of the tail, the product tail, which means that when you have very, very high velocity products where there is a huge flow through, that potentially people go to larger marketplaces. And most of the times brands as well as retailers, they find challenges in terms of managing the product tail. And what I mean by product tail is the set of products which don't account for a huge volume. So our positioning there would be that can we aggregate the tail and generate demand where the margins are potentially much better. If you look at our supply chain business and logistics, with the introduction of GST, that we have a very strong thesis on how that potentially changes. And we are building out our logistics format also to be able to capitalize on the introduction of GST, which allows us to keep on expanding our framework and grow to the next format. So our opportunity in terms of the product segmentation is not necessarily just to show very high revenues, which potentially have zero margins or a very negative margin, if you will, for many of the e-commerce companies. What we have focused on is when we talk about products, we build out supply chain and logistics format. Today, it is not revenue generating for us. But we have a very strong thesis in terms of how that potentially changes with the introduction of GST. And the company is planning to expand the logistics format to several hundred cities. It is enabled through our technology formats. So we will still be asset light compared to most of the other companies that potentially operate in this space. But we think that if we focus on the supply chain of the product tail, which is the aggregation framework, and keep on offering our platform to very large brands and retailers, that this opportunity of product segment becomes very accretive. You will keep on hearing more about what the company does in the next few quarters in terms of how to potentially synergize both offline as well as online formats to be able to capitalize on the product.
Okay, so Vishal, having spoken about all of these, and afraid paucity of time, so getting straight to the point, the addressable market is large. You'll figure out what works best for you over the course of the next 1 year, at least, if not more. What's the quantum of growth that you can show? Because your reported numbers look good. The addressable market size growth is fairly large too. What would Infibeam do? I'm not getting into specifics because I know you still have your results to come out with, but give us a broad gauge picture. Do you think over 100% growth bottom line that you've shown for the quarter is something that you can repeat for the year at large or for FY19 as well?
So you see, as far as the company's focus is concerned, we are of course focused in terms of building out a very strong merchant business through our services portfolio. Today we have got 70,000 odd merchants on our framework as of first quarter. We believe that with new opportunities like government e-marketplace and many others, you will see reported numbers like 45,000 odd merchants already signed up on that marketplace. It's alive and running as of today. So we think that we have a framework where we can keep on adding merchants and keep on growing that portfolio, which results in higher revenue base for us. So we think that the services contribution of our business today is more than 60%. That potentially continues on, and we'll keep on growing the absolute base, which has very, very high EBITDA margins of more than 50%. So we think that that will continue on as we actually scale up our framework. The second piece, which is the transactional piece, which adds to our service revenue. If you look at last year, the total processing volume was 12,000 crores. It is very important to understand this is not GMV. This is processing volume that results into net revenue for us. It actually helps the company build out a bottom line. So we believe that if last year we processed 12,000 crores and this year on a run rate basis, if it is at 18,000 crores, we believe that that potentially adds to our revenue base, and that as demonetization and many digital initiatives will drive more merchants to transact online, that potentially becomes an opportunity for us to monetize upon. And we believe that as we build out even opportunities like government e-marketplace,
right,
with 6 to 7 crores of transactions going online, that results in a better bottom line for us.
Okay, Vishal.
We believe that.
Okay, I got the answer, Vishal. 10-second answer. I'm on your site. It says Infibeam Festival offers up to 82% off. How do you make money if you give 82% off? That's
It is actually merchants giving many offers.
No, I'm just kidding. But it's a great festival offer, Vishal. 82% off is fairly alluring. I'll go to the website and start shopping after the show is over. Thanks so much for joining us today on IndianOpen, and look forward to talk to you post your numbers as well. It's Infibeam, guys. 82% off.
I'm still confused as to why they're so gung-ho about their products business, and if the services business is doing so well as they've just claimed, and they're earning every transaction
and the numbers are showing
on every website that they've helped put up, and 60% of their revenue at this point in time, and it's clearly not as high a cash burn business as the product side of the business, then why not just specialize in that? I mean, last quarter they were talking about building out their entertainment and education platform. We didn't get a chance to talk to him about that, but tough to be so many different things to so many different people. But maybe they'll make a success of it.